Hello, my name is Professor Larry Louie, and welcome to your Business Challenge. You will be participating in the marketplace simulation entitled Venture Strategy, and it's one of those things in your education here that you'll both have a lot of fun and learn a lot. Let's see if that happens when you're concluding this particular simulation. So the learning strategy is very simple. There's a phrase from an old Chinese proverb: I listen, I forget. I see, I remember. I do, I understand. A few words, but very telling. We tend to remember things that we do, not what we hear from even a professor. So here we're going to be doing, and you're going to learn by doing. It's part of our whole overall experiential learning, really put into action with this simulation. If we look at it from a very narrow point of view, we can't see the big picture. So let's say I'm that person that's blind and says, tell me what you see. Well, my blind colleagues are poking around and say, it's a sheet of rawhide. Another pokes around and says, it's a steel tube. Another says, it's a snake. And finally, someone says, it's a tree trunk. Obviously, we have our vision. We can see that's an elephant. But what if you couldn't see everything so clearly? And you need to use tools and use probes to ascertain what is before you. That's part of what business is. We're probing to see what the market's like. We're probing and watching to see what our competitors are doing. So that's what we're going to be doing again in very rapid fashion in this simulation. So we have individual roles. We'll be playing different roles for our company. Someone will serve as marketing, head, accounting, distribution, production, finance, and human resources. Each of these have some importance in the simulation, and no one can succeed by itself. It all needs to work together as a real company and as a real team in order to succeed in the simulation. What will you experience and learn from this simulation? First, you're going to learn about business concepts, principles, and different ways of thinking. You're also going to be using strategic planning and management in a dynamic environment. By strategic planning, it's understanding what is the future of the company. What are you trying to do in the context of the market and your competitive actions? In dynamic, it means that every single quarter in this simulation is going to change. In fact, the actions that you and your competitors take will eventually shape the growth and the marketplace demand. That's why it's dynamic. It's really built on the work done by you and your colleagues once you're in the competition. You're going to learn and use leadership, teamwork, and interpersonal skills a lot because by definition and by construction, this is intense. And that kind of calls out all those things, how we are as a leader, as a follower, as a peer. All those we put to play in the simulation. You can be running a totally integrated company with the aspects as mentioned, where sales, marketing, production, human, some analytics, and also financial resources. You're going to be able to see the implications of business decisions, both financial and non-financial. In this way, the simulation is not real. In real life, you need to wait at least a quarter to see the results of your work in the quarter. You'll see that we're going to be doing, in a matter of hours, we're going to see one quarter pass. In the course of just a few days, we'll go through over a year's worth of action inside of a real company. That's what we're going to be doing is we're going to be compressing learning into our 3-day exercise. We're going to be using market data and competitive signals to adjust the strategic plan and more tightly focus our business tactics because it's a move and then a counter move, and that's going to be running throughout the entire 6 quarters. You're going to learn what it takes to start up and manage and launch a new venture. And hopefully you're going to build confidence through knowledge and experience. The scenario is as follows. Your team is a company in the world of other competitors. The industry is bicycles with the innovation of 3D printed carbon fiber bikes. All companies start with exactly the same resources and opportunities. You will be receiving data throughout the simulation about the markets, about your sales, about the sales of your competitors, profits, production results, stockouts, which means you had more demand than you had supply. So that's what a stockout is. You'll come to really watch that carefully and watch competitor moves and see the effectiveness of advertising in different types of media. You'll have decisions over 6 quarters, and then the simulation ends and the winners are going to be announced, all wrapped up in the 3-day package that we have for the simulation. So during each quarter, you'll be evaluating results, analyzing competitive situation, and making new decisions, pivots if you will, hopefully not complete radical change, but if need be, do the quick radical change. Each world will be different since the teams and the strategies make the markets. The business functions are marketing, where you're going to establishing and understanding the needs of your customers through brand design, pricing, and advertising. Sales and distributions are the location and timing of sales outlets around the world. Salesforce management, how many salespeople do you have? How do you target? How do you train them? Third is manufacturing. You'll be doing capacity planning based on your projected demand for your product. You'll be scheduling production and watching for quality improvement. In the area of finance, you'll be watching financial performance, managing your cash flow, looking at profits, and looking at capital structure to see if you have enough money to pull off your strategy. And in human resources, you'll be looking at compensation plans and worker productivity. The roles you're going to perform in this simulation are each of those roles you'll be embodying, and that's your job. You also need to work as a team overall, so everyone is accountable individually and collectively for the performance of your company. And your team will be challenged to allocate the roles: sales, marketing, finance, manufacturing, HR, and a rotating CEO role, and determine the balance between working together and working independently in order to be both efficient and effective in your decisions. You'll see that there are 3 market segments of recreation, mountain, and speed bicycles, and you're looking at the data to look at the trade-offs of designing a bike and launching a bike and selling it at different price points, and you're having access to a lot of data. Even from the beginning, you'll see a lot of market data. Your job is to design, promote, and support the sales of your bikes. The channels and actions are looking at the world. You have the opportunity to select when and where to open your stores. Your option is to open an e-commerce site and sell your bicycles online. In manufacturing, you have decisions such as capacity. Do you build huge capacity and not use it, knowing that it's going to cost capital? Or do you play it safe and have little capacity only to be upset with yourself if you run short? So capacity is a big deal because there's a time lag when that capacity comes on stream. Then you have production levels. For every given quarter, you need to set and make a certain amount of bikes. How many do you make in anticipation of that quarter's demand? Then technology. Are you going to be implementing new technology along the way to increase the quality or lowering the cost of manufacturing bikes? And then looking at compensation. How will you pay your people working in your factories? And how will that impact your cost of manufacturing bike and overall your profitability? In administrative functions like accounting, finance, and human resources, we'll be looking at accounting reporting throughout, access to a lot of data. In finance, you're going to look at decisions on, do I raise money? Do I borrow money? How do I spend the money I have? Do I invest money? And you'll look at profitability, the stock performance, which you'll get feedback every single quarter, and then funding of the loans, knowing that loans have a dual edge to them. Too much loans put you at risk, financial risk, and perhaps bankruptcy. Not enough loans means you may not be utilizing enough financial capital to grow your business. And then HR, we'll be looking after hiring levels throughout all the different departments in the company, and how do you compensate the people in those departments. The team setup has these following recommended roles. You'll either be in a team size of 4, 5, or 6 people on a team, and here is how you're going to be allocating the roles. First, note that every person must be the CEO at least one time during the 6 quarters. Obviously, if you have less than 6 people on the team, 1 or 2 of the people will be doing the CEO role twice. But that's just during that particular quarter. The rest of the time, you're a specialist. You get specialized in marketing, sales, manufacturing, finance, HR, and analysis. If you have a team of 4, you'll have, this is recommended, you're free to choose what you want, but the recommendation is 1 person for marketing, 1 person for sales, 1 person for manufacturing, and 1 person doing the administrative functions of finance and HR. If you have a team size of 5, then you can expand out where each of those 5 functions would have a person assigned, and then everyone would on their own do their own analysis. If you have 6 people, now you could fully spread out into the functions where each function has 1 person, and in addition, you essentially have a free agent looking at data on behalf of any department to best benefit the company. So 1 person will be a data analysis person, which is a shared resource across all the functions in your company. First, you'll notice you need money. Where do you get your money? Well, the good news is you've already got programmed in quarters 1, 2, and 3 investments that you as a founding team will be contributing. The dollar amounts will be $1.5 million in Q1, another $500,000 in Q2 and Q3, and then at the end of Q3, something important happens. You're going to be asked to create a plan, a one-page plan that you'll be pitching to a venture capitalist to raise a potential of $2.5 million. And that will give you additional capital to then pivot, if necessary, your business strategy, or attack, if you've got a plan that's working, into the final run of quarters 4, 5, and 6. So you have some money to get you going in the growth and the beginning of your company, and then a larger slug of capital, which should propel you into becoming a global success. The executive team starts with owning 100% of the company until the VC investment occurs. 25,000 shares will be issued to the executive team in exchange for their $2.5 million, and the initial stock value is $100 per share. Debt financing is going to be available starting in Q4. The bank will extend a line of credit equal to 1.5 times the equity position of the previous quarter. So the stronger and bigger you get, the more loan that you're able to get from the bank, which makes sense. The bank is highly risk averse and can call your loan in whole or in part if your debt capacity declines due to unusual or extended periods of losses. And that's real life as well. As long as you're doing well, the bank will be standing behind you. But once there's a risk, they want to get out before things get tough, and they will call your loan. But what if you're caught short within a quarter? If you don't anticipate a loss, then there's going to be a loan shark that will make sure that you get the cash you need for the quarter, but on expensive terms. Those terms would be based on loan interest rates that have a sliding scale, which begins at 10% per quarter, but it also can go as high as 25% per quarter if your situation gets more and more dire. But it's expensive money. 10% per quarter times 4 is 40% per year. So that's a loan shark. And for each $100 of the loan shark loan, they will take 1 share of stock. So not only will you pay a heavy price in interest, you'll also be diluting the ownership of you and your venture capitalists. So if all this fails, you go bankruptcy. Now, it's unlikely, knock on wood, that our teams would ever go bankrupt because there's all these support mechanisms, right? You have capital by way of equity, you have loans from banks, you have loans from loan sharks. So in general, our companies don't go bankrupt, but it can occur. I don't want you to try it out and say, I'm going to prove that we can go bankrupt. Don't do that. That's not the purpose of this exercise. Your purpose is to succeed. There's a performance measurement dashboard that you're going to be seeing quite a bit. And you have probably more data than even large companies have at this moment. This is just one example of the screens you'll see. And it shows across these sample companies, you'll see across the top, Excelsior Bikes, Cycle, Road Warriors, and La Corta. Those are names of companies. You will get to choose the name of your own company. And then you have measures like demand, stock outs, net income, cash flow, balanced scorecard, and cumulative balanced scorecard. Cumulative balanced scorecard is the basis on which we'll declare a winner of the simulation. So pay attention to all the metrics, but know that it's the cumulative balanced scorecard that will dictate at the end who's the winner of the simulation. So let's look more at this balanced scorecard. Now, it's unlike one that we may have shown in one of our classes, where we have 4 perspectives of financial, customer, innovation, and internal. Here we have very specific metrics that deal with the same types of things, just displayed in a different fashion. It is financial performance, market effectiveness, investment in the future, looking at creation of wealth, financial risk, asset management, manufacturing productivity, and human resource management. You can see right away that those functions that we talked about all have some bearing into one or more of these attributes of the balanced scorecard. So it's pretty easy to get all caught up in market share and short-term profits. But notice that there's things that look at future, investment in the future. That could be by financial capacity or physical or manufacturing capacity, or building out a sales force that has strength in multiple regions. The balanced scorecard measures both short-term and long-term. And the best managers will be good in all measured areas. On the right again is an example from an actual prior running of the simulation, where we see pretty clear winner here, or a leader anyway, is that There's Cycles Perfecta, has very high performance across many of these attributes, and they were the leading team at the time. The screen also highlights who's the top in each of those respective areas of the balanced scorecard. We also see that there are ways for you to diagnose how you're doing quarter by quarter, and those would guide you on what changes are necessary in the future quarter moves. So here's some tips and tricks, or not. First thing is the game algorithm is dynamic and is based on cumulative decisions of all teams. The internet will not help you because it's dynamic and changing. You're making the characteristics of the market, the demand, and the competitive moves. The other thing is that all the information you need is provided in the simulation. Because this is a competition, I or your other professors will not be answering any questions. Resist the temptation to blame the technology. There's a bug in the system or the algorithm doesn't make sense. Just go with it. This has been in existence for over 10 years, and I'm sure at this point thousands of management people have gone through this particular simulation, and they've been tuning this continuously over the period. So don't try to out-algorithm the algorithm. And being prepared won't guarantee success, but being unprepared will essentially guarantee failure. The assessments are going to be as follows, and look to my courses to see the specific details. But the primary deliverable is a board report. It's a team submission due a few days after the completion of the simulation. So you have this intense period where you're in the fray, battling it out. And then after it's over, you and your team can then sit back, reflect, and create a board presentation. The second requirement is a reflection paper, which is individual for each person on your team. That's also due a few days after the completion of simulation. The third assessment is the performance in the simulation itself. This is team ranking. The first place team will get more points than the second, etc. And this is going to be determined just factually based on where the standings ended after Q6. Other deliverables during the simulation will include a strategic plan that is due in quarter one, or if you're running this really well, your team would get together and discuss before day one. So you have your act ready to go right at the beginning of the first day. Then there's going to be a plan for the venture capitalists, and there will be time allocated for you to reflect on results through Q3, for you to devise your strategy moving forward and capture that in a one-page summary of your future actions and assessment of your past 3 quarters. So those are the deliverables, most of which are after the simulation, but there's a lot happening that you're going to be participating in during the simulation itself. Inside the simulation, there's a pretty extensive peer evaluation, which we will then release at the end of the simulation in order for you to get feedback and give feedback to your members of the team while it's fresh in your head. And this gives a lot of feedback that will be helpful in you writing your board report and your individual reflection papers. So let's summarize those quarters and what happens in Q1 through 6. Q1, you're setting up the business. Frankly, it's mostly administrative, not a lot of business decisions yet happening. There's plenty to do because you're setting up your business. That's the strategy for the company, as well as a lot of logistics of who's doing what, and also things like naming your company. That's in Q1. In Q2, you're launching the business, and now you're offering products to the market. You're testing to see where the market is, and more importantly, where are your competitors and what are they up to? So that's Q2. Q3 is now you have more data and you're able to launch in more numbers and see more specifically whether your initial strategy works or doesn't. And as I mentioned, after Q3, there's a pause. With that pause, you're going to look at what happened so far and then compare that to your expected results, and then either push forward if it's working, or you have a time to think, discuss, and then alter your plan going forward. And you'll capture that inside of a plan for the venture capitalist because you want more money. You want another $2.5 million. So that one-page pitch, if you will, is to VCs. For brevity of the simulation, you're just going to write it out in a Word document and submit it. It is like a pitch, right? You're really reflecting what has happened and what you're going to tell your financing companies, that your plans in order to entice them to invest in your business. Q4, you're going to raise the VC and grow your business. To make the streamlined results for our simulation, everyone's going to get the full 2.5 million. I shouldn't have blown it, right? Because we wanted this to be fair and want everyone to have equal access. So know that your VC plan is for your purposes, but that is going to be part of the overall evaluation of your team performance. But as far as the money, every team will get all the money they need to be very competitive, to fight it out in the last 3 quarters. So now you have Q4, 5, 6. Now you're running the business. And now you're hopefully hitting some sales growth and profit growth and cash flow growth. Q1, setting up the business, you're going to have 3 tasks. 1 is to organize the business. 2 is establish your direction. And 3 is to set up shop with some basic tactical decisions. Organizing business means naming your business, assigning who in your team has what particular functional role, share personal learning goals with each other so you can be aware of strengths and weaknesses you want to work on, and establish team norms. Who's going to do what? Are you going to be on time? Is everyone together, etc.? The next task is look at strategic direction. This is captured in that 1-pager. And you're going to look at what financing do we have and what are the costs to open sales, costs to set up factory. And this data is provided inside the simulation. And then you're going to establish the direction of the company, such as your mission, your culture, the objectives and strategic thrusts, and then formulate your functional strategies for each of the roles that you have. Strategic planning, I won't go through this entire slide, but this is a depiction of the process you would undergo to think through what are we trying to do as a team, and looking at the analysis of where are you right now, internally and externally, and then formulate how do we deploy our resources in order to attack the market. That boils down into what do we do? Now we have a direction. How do we implement those? And those are the tactics, right? And that loops through over and over again. And we will be essentially living this model as we go through each of the quarters. Quarter 1 also has task number 3, which is setting up shop. Your first production facility opportunity is in Bangalore. And you're going to build a certain amount of capacity. And you're going to develop a plan for where you're going to have sales territories. Choose among the offers of the cities around the world for you to set up shop. And you're looking at where to set up and open your initial store or stores. And you're going to design 2 brands to test out 2 market segments of the 3. And so a lot of work is going to be done starting to build your actual bicycles. Design features of your bikes must match the target market needs. You'll see information about characteristics of your target market. So you're going to base your design on what does the market want. If they want skinny, fast tires to be a speed bike, are you going to put on a large mountain bike tire? I don't think so. So each of the decisions have multiple choices, and then you're going to be making judgment calls on how do you build the components and characteristics of the bike to meet the target you're trying to attack. And you have components, as mentioned, such as the frame, safety features, the level of fun, like speeds and the types of brakes. These are all attributes of the bicycle that you'll be able to specify and then offer, again, against competition, your bike compared to other bikes, and the market will then vote with their sales. Here's a sample schedule, so look at the specifics for your particular cohort, but we'll have running over 3 days. The first day is a very short day. It's only 3 hours total. Days 2 and 3 are longer, and those are 4-hour blocks. In day 1, we'll finish Qs 1 and 2. Quarter 1 is the setup that we just discussed. Quarter 2 is then the launch. And then the time limit is very strict because the way the simulation works, if all teams do not submit their decisions, no team can move forward. So we have very strict deadlines, so please adhere to them. It keeps things running smoothly. We have other ways to make sure you do that as well. And the time limit on the first one is 1.5 hours, and that is a time limit. That's a deadline. The next one we may extend so that you could stay on afterwards to complete your work. There's a deliverable in Q1, as mentioned, is your 1-page strategy summary. So that's day 1. When day 2 begins, you'll see the results of quarter 2 and then chart your actions for Q3, and you'll have 1.5 hours, again, a tough deadline, 1.5 hours to finish quarter 3. Because when you're done with quarter 3, then you'll get the results, and all the teams can take a moment to reflect on what just happened in Q1, 2, 3 in order to then modify their plans and put together their plan for the last 3 quarters. And along with that, devise a plan for the VCs. How are you going to communicate to the VCs to warrant their investment of $2.5 million? Quarter 4 will then kick off, and you'll have 1.5 hours within the time envelope of the class to complete quarter 4. But we'll see how it's going. If we want to extend a little further, we can as well, so that we can then give you adequate time to make all your moves in Q4. So Q5 will then start the day 3, where sometime in the middle of the evening, Q4 will close, and then you'll have time to look at those results if you care to. But if not, you'll have 1.5 hours to complete quarter 5 on day 3. That's a firm deadline, because once that closes, you'll go right into the final quarter, and that is a 1-hour quarter because not a lot's moving on at that point. Your strategies are quite clear. There's not a lot of degrees of movement still possible in one quarter. So that's a 1-hour deadline. That allows us to have 1.5 hours to complete our debrief, both in terms of overall for the worlds that we have with competition, and then allow us to have a large group debrief and small group debrief. We'll tell you more about that when we get to it, all right? So the point is, if you look at this, it's 3 action-packed days of running the simulation that hopefully there's going to be a lot of learning going on. Your preparation before day 1 is to do the following. Watch the 10-minute video on how the simulation works. There's a link here, but it's also in my courses. Determine your team name. You could discuss this via chat or email and just come up with some ideas for your team name. You don't really want to bog down when the clock is running to argue about a name. And then determine your roles, the roles that we specified earlier. What would you like to be? Sometimes people want to be what they're good at. I'm from manufacturing. I want to run manufacturing. Or they may say, I'm not from manufacturing. I want to learn how to manage manufacturing. So that's something for each of you to decide and for the team to discuss and agree on. Then we're going to be preparing your strategy, which you will finalize in Q1. Quarter 1 is either open right now or very soon. So you could even look at it before day 1 begins, and you could look at the screens, your choices, and you could even start putting in some decisions. But do not hit submit. Similar to doing a quiz, you could do all the quiz and save it all you want. But once you hit submit, it's done. So you don't want to prematurely hit submit. So go ahead, learn about the user interface in the simulation, even put in some decisions that you've already kind of nailed down. Just make sure don't hit submit, because you'll have time on day 1 to finalize your discussions and then hit submit. And one very important item are micro simulations. What micro simulations are a little bit of business education and a little bit of tips on how to utilize the program and its various levers to push and pull on how to run these parts of the business. And again, there's a link here, but you'll find it also in the other materials. Each of those takes about 15 minutes. Most of them are actually shorter than 15, and they're pretty short and sweet about very specific things that you'll have to decide if you're a functional manager. Here's a list of the micro simulations, and what we've done is we've broken out the main functions of marketing, sales, manufacturing, administrative, and analytics, and little X's on who should or maybe could get value from looking at it. You might say, wait a minute, why are there so many X's on this chart? Well, the reason is, even though you may be, say, in finance, when you want to know the characteristics of how to do a product design, so watch the microsim on product design. So only a couple of these are very specific, like production scheduling. There's not a lot of value for marketing and sales and admin to look at the manufacturing scheduling role, but you could if you wanted to. Analytics, you notice, looks at everything, right? Because they're going to have access to all the data, as will you, but their jobs is to support all the functions in making decisions. So look at this and definitely do the ones that pertain to your role, and definitely look at these if you can before the simulation begins. You can see that in the column labeled quarter is where these decisions are most at play. So you'll see that the first 2 topics of product design and strategic planning are absolutely things you'll be doing in quarter 1. So you could start by looking at just Q1 sims, but look at what goes after that. 2, 3, 4, and 5 have some as well. So you can look ahead since you have time, and that's recommended. So the question you may have is, well, does higher effort lead to higher performance? Now, being a professor, you know what my answer is going to be. Yes, but here's some data to support my assertion. Here are actual results from a recent simulation where we had 5 teams, just labeled A through E, and we had their cumulative balance scorecard, and you can see it was a very tight race. where Team A won, but just barely beat out Team E. Then we see the total time spent in the simulation, accumulated minutes, if you will, from all the members of the team through all the quarters. And then the time spent on microsims, because when you're in the sim, the system knows you're in, and it's actually measuring your progress and whether you've completed and how much time you spent. Then on the right side, just for fun, I put, let's rank order them and see how they did. So Team A won, and so cumulative balanced scorecard ranking is 1, but they spent the second most amount of times in minutes. You see the data on the left, and they spent the most amount of time on preparation and microsims. So there's a pretty clear correlation for the first place team to do a lot of investment, probably up front, to learn the program and learn the areas of business, so that when they were in the ticking time of the simulation, they use those very well and not flailing around trying to figure things out. The second place team was Team E, which just barely got beat out. But notice that they did not spend as much time as Team A, like half the time in both the total time and sims. So they were very effective despite not a lot of time investment. Now Team D was almost edging out Team E for second place. And there they were third place in terms of rank, in time spent, and second most time spent in microsims. So there's a pretty high payback in doing your effort in either investing time in microsims before or during the simulation period, or the total time spent by the teams as they're in quarters 1 through 6. So I hope you got all that. If not, you can watch this again or go through the materials in my courses. So we'll see you on day 1 at your scheduled time. Look at that schedule very carefully. Don't be late, and get prepared. Ready, set, and soon to be go. Enjoy.